What's up, everybody? This is Sid for CedItUp Production. I know it's a Monday, but I got a special show today. It's tax season, tax season. And know I supposed to came on here Friday, I think it was Friday or Saturday to do this, but couldn't do it because the weather out here is crazy. So I had to get some things for the house, and I know a lot of people had to do things for the house and get the salt and shovels and things like that. So I had we had postponed it. Let me go ahead and get this thing started. Hold on one second. I'm sorry, everybody. I got a special guest, longtime friend from high school, and she does taxes. We do this every year because I want people to be informed of what's going on with the tax. Because every year is something different with doing your taxes. So what I'm trying to do is do this every year. So without further ado, I got my longtime friend. We got Rolanda Johnson that's here right now. How you doing, Rolanda?
Hey, Sam, how you doing?
I'm good. I am good. I'm just trying to get everything together for you. About to tag you in this so you can actually. I got to delete some too. Uh, uh, get that out of there. We here talk to like I said, we supposed to be in here. I think I want to say Friday,
Yeah, it was Friday.
But I was trying to get things together, running a little late, and I said, well, let's go ahead and postpone it until Saturday. Then I was like, oh, it's bad. It's bad for Saturday. You know what I'm saying?
It
So,
was
how's everything going with you up there?
pretty good, pretty good. I'm actually in Chicago today, so
Oh,
it's
okay.
cold. It's about to start snowing again. So-
See, you used to that. See, you got used to that weather up there in Florida now, so you don't even know. You ain't doing.
oh, I know. I'm here every tax season, so I don't escape it. Although I don't live here anymore, I still be in it.
Now, what I wanted to do is I'm trying to tag you up in this one. Hold on one second. There you go, right there. Okay. So, when we get started, I mean, a lot of people, it's a lot of things that's going to change. I know it's always changing when tax season come. So, the things that you seen or heard about. Let's get run before we get into that. Let people know who you are and what you do. I don't want to do that. What you do?
Okay, my name is Rolanda Johnson, and I am a tax and financial professional. I've been doing this ever since 2002. Um, I first started off working with Mr. George Hill,
Mhm.
working his back office with him. He taught me everything that I know. And I worked with him for 3 years. And after that, I started my own firm in 2006. And so I
Oh,
currently operate 4 locations.
wow,
So,
wow.
yeah,
So, I mean, and then the tax thing has always been a big it's a big it's a big deal every year. You know what I'm saying? People
always.
people people feed on taxes. You know what I'm saying? So, um, this year, I mean, when is the date we can start doing filing your taxes?
Today is day one.
Oh, okay, cool. So we
Today
right
is
on
day
time.
one. We're on day one of tax season 2025.
Gotcha. So this year, like I said, every year is something different. Give people insight what people need to look forward to or look into when they doing their taxes this year.
Well, first off, our current administration have enacted a new bill called the One Big Beautiful Bill. There's lots of different things that is contained within that bill, but I kind of just want to touch on the key elements for individual tax um, filers.
Mhm.
For one, there's no more paper checks. No more paper checks.
So it is
Everything is electronic this year.
okay.
So it's and when I say there's no more paper checks, the U.S. Department of Treasury will not send anybody a paper check anymore. If anyone receives a paper check, it's going to be solely from their tax professionals, from their tax software programs that they run with banks.
Okay.
So no checks will be issued from the U.S. Department of Treasury.
So you gotta have a
That's
bank account, direct deposit.
You got to have a bank deposit, whether you use a prepaid card or whether you have your own personal account.
Gotcha.
Yeah. So that's the first thing. Second thing, I always tell people now, get an ID.me account with the IRS. That is so important because
What is
if you
that?
so what that account is, it allows you to log into your account with the IRS, and you can view your own transcripts, you can view W-2s and other tax forms that have been issued to you
Okay.
by the various payers that may issue, whether it's someone that issued you a 1099 or an employer that issued you a W-2, whether you're a homeowner and your mortgage provider has issued your interest statement,
Hmm.
banks, they issue 1099s for interest and dividends that you receive. So any tax forms you can view online if you have an ID.me account.
Gotcha. Gotcha. I I wanted to because I want people to know what you're talking about. Because when you say sometimes
Exactly.
we probably go over their head. Well, you may go over their head because I'm learning just as everybody else. You know what I'm saying? So if certain things that I catch, I'm gonna ask you. You know what I'm saying? So everybody can be
Sure,
informed what's
sure.
going on. So continue. Go ahead.
No,
Let
no,
people
no.
get.
That's fine. You can interrupt me at any time because I don't want to be techie about
Mhm.
anything. I want to talk in layman's terms, but some things you just can't talk,
I'm not a
you know.
lame, okay?
I said layman's, not a lame. I said
Okay.
layman's, regular
Okay.
English, plain English. I'm not
Okay.
calling anybody a lame. Trust me.
No, so I mean, so a lot of changes. So, the rundown is it a lot that's changed from last year to this year?
Well, the biggest change that I've seen that's going to impact the demographic of individuals that I service is there is a new schedule called a Schedule 1A. There's already a Schedule 1, but now there's a Schedule 1A. And what that Schedule 1A does, it allows for additional deductions and credits that we
Mhm.
weren't able to do last year.
Okay.
So the one huge credit, and to me, this is going to be good for those working class individuals because let's just go back a little bit. Back the Trump when Trump was in his first term,
Mhm.
he enacted laws called the Tax Cuts and Job Act.
Mhm.
So with that, a lot of things change. A lot of people can no longer itemize their deductions. And what that means is whatever your standard deduction is for your filing status, that's all you can deduct from your income.
Mhm.
And so what a standard deduction does, it basically just tells you how much money you can earn tax free.
Okay.
And so anything above that, you have to itemize your deductions. And
Mm.
itemized deductions being you're writing off your interest if you own a home. You're writing
Gas.
off 7.5% of
Mhm.
your medical bills above your adjusted gross income. You are able to write off your state and local taxes.
Mhm.
A lot of people were able to write off their unreimbursed business expenses. Now, that's something that he took away when he was
Mm.
in office the first time. So that impacted a lot of my clients who were nurses, who were
Mhm.
police officers, firemen. They were
Mhm.
writing off like their scrubs, their medical equipment, and things like that. They could no longer itemize deductions because the standard deduction was so high already.
Okay.
So what that did, it lowered their um, refunds amounts,
Okay.
or it made their tax bill go up.
Okay.
So what he's done this time, he's kind of making up a little bit.
Mhm.
So now those higher earners that that are affected by the higher standard deductions, now they can take some additional deductions outside of trying to itemize their deductions. So
Okay.
one of the deductions that has been added this year is what's called the overtime deduction. So there's lots of people that work overtime.
Mhm.
So you're able to write off. Let's see, I got some little cheat sheets over here. 12 up to $12,500 of your earnings on a W-2. If
Mhm.
it was due to overtime, you can
Mhm.
deduct that from your income.
Oh, wow.
Yeah. So the thing about that, there's not a whole lot of guidance on that as of yet. But
Mhm.
what I'll be telling my clients as they start to get their taxes done, hey, you're going to have to go back, pull up check stubs, and we're just going to have to, add it up and see what it was. And then we'll take the deduction that way.
Okay.
Because you don't want to get burned later on for incorrectly reporting what you made in overtime.
Mhm.
Because, there are going to be some slick preparers out here that they're just trying to make themselves look good. They want to try to act like they can get you back $1 million
Yeah.
just because there's some new deductions that are on the table. But
Mhm.
what that's going to do is bite the taxpayer in the butt later
Mhm.
if they don't have that documentation.
Okay.
So, what I like about you having me on here is to, you know, tell people when you're filing your taxes, you're responsible for that tax return. Although you may pay a professional, at the
Mhm.
end of the day, when you sign that tax return and they submit it to the IRS, you're signing off that these items, this tax return is true to the best of my knowledge.
Right.
You're going to be held accountable for that.
Mhm.
And there are some professionals out there that aren't signing returns. They prepare those tax returns as if you did it yourself. So
Mm.
pay attention to that. On
Wow.
page 2 of your 1040 form, there is a little thing at the bottom that says pay preparer. That preparer that you're paying to do your tax return need to fill that out with their name, their PTIN number. A PTIN number is a preparer tax information number. It's like our social security number to being a tax professional. So
Okay.
that holds that tax professional accountable as well as the taxpayer.
Mm.
So you can fall back on that, in a sense to say, hey, I got professional advice that I could do this. But most of those preparers are doing it as what we call ghost preparers. They're checking the box as self prepared. So it makes the IRS think that
Think
you
you
did your
did it.
own return
Wow.
and they're off the hook and you're on the hook for everything.
So I mean, not. I mean, I'm figuring majority of that had to do with people that's trying to get a lot of money, and then they don't want to like whoever doing your taxes not gonna put their name on it. Like I ain't do it, they did it. So I mean, like you said, I mean, when doing your taxes, what are you trying? I know you try to get the most you can out of it, but
Correct.
sometimes if it's a lot, it's too good to. Sometimes it could be too good to be true. I mean, what you need to watch for when you're doing your taxes.
Well, first of all, you just need to be honest. Period.
Okay.
Just be honest about whatever it is that
Mm.
you have done, the income that you've made,
Mhm.
the deductions that you qualify for, and the credits that you qualify for. Just be honest. As a new client with us, we go line by line with our new clients and let them know everything that's on their return, and they understand it from their standpoint because it's their tax return. They need to know what's on it. So we go line by line. So it's like I always tell people as a new client, hey, it's almost like a police interrogation when you come get your taxes done with us because
Mhm.
we're going to ask a ton of questions. It may be questions that no one else have ever asked you
Mhm.
while preparing your taxes because some people just take W-2s, take 1099s, IDs, social security cards, and that's it.
Right.
We probe a little bit deeper because some things taxpayers aren't privy to know that that's something that they can write off or that's something that they qualify for.
Mm.
So we ask a ton of questions. We go through an extensive interview process so that we know that we don't leave any money on the table because our goal is to get you the biggest refund or the smallest tax bill. So
Okay.
our objective is to get your taxable income as close to zero as possible. And
Okay.
what that does, it yields either the highest refund or the lowest tax bill.
Yeah, I mean, because some people run into an issue when they owe, you know what I'm saying?
Hmm.
And things like that. Because I ran into that once before, you know what I'm saying? So I
Hmm.
mean, I know that feeling. When you owe them, I mean, you gotta have to set that up. You can't avoid it. You
Right,
can't avoid it,
right.
you know what I'm saying? So you definitely want to be on top of that. Not to a degree, you gotta be on top of that, you know what I'm saying? Because
Absolutely.
they gonna ask for it and they're gonna want it kinda like ASAP, you know what I'm saying? Because if you let it linger, it's gonna just double the next time, you know what I'm saying? So
Yes. And at our firm, we're not just doing tax preparation, we're doing tax planning. So it's important that you go to a tax professional that understands tax planning,
Mhm.
because if you don't, they're just going to be reactive to whatever has happened. With our
Oh,
clients, we're meeting with them more than once a year, because we need to see if there's anything that's changing. Are there any different life circumstances that have happened? Have you had a baby? Have you purchased a home? Have you gotten married? Have you gotten divorced? Because all of those things affect your tax return.
gotcha.
So you need to be abreast to that. And so we are proactive with our clients. So if we see some changes that are coming up, for instance, if you've earned more money,
Mm.
if you started a business, that's going to affect your tax income, your tax return. So we need to tax plan for that. So not only do we prepare taxes, we tax plan with our clients.
Gotcha. So even if you got your own business or whatever, how do you separate that? Is it together or do you separate it?
It depends on the structure of your business.
Okay.
Now, for most people, I know a lot of people are attracted to the LLC because that's the buzz on the street right now. Get an LLC, get an LLC.
Yeah.
However, there are two different types of LLCs. There's a single member LLC and there's a multi member LLC.
Mm.
Quite, you know, simple. A single member LLC, it just means one person owns the business.
Hmm.
If you have a single member LLC, which most people, that's what they're setting up, that goes on your personal tax return.
Okay.
So you're just combining it all.
Gotcha.
Sometimes that's a good thing, sometimes that's a bad thing. That's why you have to meet with somebody in tax plan, because it depends on how much money you're making, how many expenses that you can write off. So you have to plan for that. So sometimes that single member LLC is not a good business structure for someone. They
Okay.
may need to consider a corporation.
I was about to ask what is the difference between, I mean, as far as like, because I think mine is a single because I do everything,
Hmm.
So I'm just trying to figure out what, I mean, so if you got a single LLC, um, I mean, how would you tell your client, like for myself or whatever,
Hmm.
to break down the expenses, like far as like, because I do my business, I'm doing a lot of things, you know what I'm saying? As
Hmm.
far
Hmm.
as doing shirts and stuff like that, also
Hmm.
doing shows and putting together parties and things like that. So how would I do my expenses as far as like report it? You know what I'm saying?
Good question. First and foremost, bookkeeping and accounting is the heartbeat of your company. I cannot stress that enough. You need to know what's going out and what's coming in.
Okay.
When you're a new startup, you need to be keeping your books on a monthly basis. I provide spreadsheets for my clients because I understand what a new startup, sometimes you can't afford to pay someone to do your bookkeeping. However, if you cannot afford bookkeeping services, and that's something that we also provide to our clients, but if you can't afford bookkeeping services, you need to be keeping the books. You do
Gotcha.
not need to be sitting down today trying to figure out what you spent January in 2024, or calling me talking about, girl, just how much do somebody in my profession usually spend?
Yeah.
That's not how it works. You
Okay.
need to give an account of what was usual and customary for you to run your business. Although in your specific industry, there are going to be some standard deductions that everybody is going to take as far as expenses.
Hmm.
So, like, say, for instance, with you, you do t shirts, you have your podcast, you do
Hmm.
shows, so someone like you're paying for venues, you're paying for the platform that we're on currently to run the podcast. You
Yeah.
have materials and equipment that you're using when you make your t-shirts. Of course, those are things that you want to write off. But there may be some other things that's unique to what you do,
Okay.
in your particular business. And if it's something that you needed that, is not customary to someone else's business that's in the same line of work, it doesn't matter, because that's what you needed to run your business. And so
Right.
that's an expense. So it's deductible.
Gotcha. Because I wasn't even thinking about even the platform I'm on right now. I'm not even thinking because a lot of things that we doing your business you could write off or whatever, but you're not thinking of it because, like I said, I mean, this thing is not free that we this platform that I'm using is not
Absolutely.
free. You know what I'm saying?
Yeah.
So I haven't thought about it like that. So I mean,
Yeah.
that's good. That's good to know.
So that's why, when we sit down with our newer clients or even our older clients like
Hmm.
you've been a client, of
Hmm.
ours. You're making some different moves with your business. That's why we have to have continuous conversations. Okay, Cedric, what did you do this year different? You know,
Hmm.
you're at home, correct?
Yeah.
Because you're running a home-based business. Part of your mortgage is tax deductible. Part of your electricity is tax deductible because you're using that to run your business. You can't have this podcast running if you don't use that
Internet.
specific place in your home, your
Yeah.
internet service,
See,
your cell phone, all of that, you know,
I'm now I am a lame because
you are not alone.
because I'm not no because I'm not thinking of none of that. Only thing I'm thinking about is the shirts that I buy and when I make my images or whatever. I'm thinking about those things. I'm not thinking about this is my home base or whatever. This is my
Hmm.
office and things like that. So
Yeah,
do tell.
yeah. Yeah, and the thing about but here's the thing: you write off the business use. You
Mhm.
can't write off the whole mortgage payment now because the
Right,
whole house isn't used for the
right,
production.
right.
So we write off the percentage of the business usage.
Okay.
It's
Hmm.
just same for your internet. If you're using your internet both for personal and business use, what percentage of that internet usage are you using to run this podcast?
Okay.
That's what's deductible. Even
Gotcha.
like with your cell phone, most people don't walk around with two phones. Some people do. I don't know how they do it because I can't. you know, what
Yeah.
percentage of the usage of your phone are you using for your business? For me, it's 100%. I have little time to talk on my cell phone personally.
Yeah.
So, you know,
Well, because I think mine is probably, I mean, because of the podcast and then me trying to keep updated on things. So I'm more like 100% as well. I mean,
yeah,
because I'm
yeah.
constantly
So,
on it like that. Yeah.
right, right. So it's all about the usage of
Okay.
certain items that you can write off as far as a business deduction. And so what that does, it takes someone's W 2 income down because you may be negative after you're writing off all of these things. Although your business was profitable, you made money, but due to the deductions that you're able to write off, you may end up with a net loss in your
Yeah.
business. So, what that net loss does, it subtracts the money that you earn from your W 2 income, which takes your taxable income down, which
Mhm.
gives you a larger refund or either a smaller tax bill. So it's
If
a balancing
if you, I
act.
mean, if you got your own business, I mean, how often? I mean, because it's a new business, how do they allow you to? How many losses? How many years of losses are they going to allow you to claim losses like that? You know?
Typically, within the first 5 years, it's kind of typical for a business to lose.
Okay.
After that, they like, look, you playing this is a hobby. No. And I'm
Yeah.
going to tell you, for my Illinois residents, Illinois is really cracking down on business losses. And I have seen where if I have an Illinois resident who has taken more than a 5-year business net loss, Illinois is saying, nope, we're not considering this as a business anymore.
Wow.
It's a hobby. Remove this off your tax return.
Mm, wow.
Yeah.
So, wow, that's something. How they gonna tell you how to run your business? But I mean,
Well, I mean, but you gotta look realistically.
yeah,
Is someone really realistically gonna run a business at a net loss for more than 5 consecutive years?
yeah, that makes sense.
After so long, they're like, no, this
Yeah,
is not a business. You're just trying to get over on us because you're doing some extra stuff on your return. And
gotcha.
see, here's the thing: when you're doing a tax return, it's all about logic and being truthful
Mm,
because it's just one big picture that you're putting together, and it has to make sense.
mm,
It has to make sense. So that's
gotcha.
why people get caught up because they put a lot of stuff on their tax return that does not look logical. because the tax software is going to do whatever you do when you key in numbers.
Hmm.
You can key in some numbers and somebody get $20,000 back, but is it a logical $20,000 refund? Not saying that people don't get a $20,000 refund, because I do them every year. I've
Yeah.
The largest refund I think to date has been $42,000 that I've done
Wow.
for a client.
Mhm.
So I mean, it is possible. However, it has to make sense. It
Yeah.
has to be logical. And so what I always tell my clients, when you get those love letters in the mail,
Hmm.
which are audits from the IRS, don't get all bent out of shape, because first and foremost, I ain't going to jail for nobody. I'm too pretty for that.
Yeah. Yeah.
And so
Yeah.
when I do a tax return, it's legal. It's on the up and up, because
Yeah.
I sign all my tax returns. So I'm not putting anything on there that I can't help you prove.
Gotcha. Gotcha. The thing is, okay, so because we're going back to when you say you sign off on it. Now, if they doing it, because you from Chicago to Florida, whatever, so you do everything. I mean, you could do things, um, um, by me being in Indianapolis, I could
Yeah,
send you my information, and then you could take care of it, whatever.
absolutely. Yeah.
So, I mean, to do that, I mean, how would I know if you signed it or not? How would I know if you signed it or not? Because I mean, you send the papers back to me, I signed it and send it to you, but who's to
Hmm.
say that you signed it?
Well, it's on the bottom of your tax return. I give you a copy of it.
Okay, so
Yeah,
when you send it over to the client, yours already signed, right?
correct. It's already signed.
So I'm
I've
just getting
already,
people.
correct. I've already signed it. You, and I'm waiting for your signature.
Okay, so I just say that because people probably would think, okay, the things to look for. Because if somebody's doing like doing how you want to call this online or whatever, sending
Hmm.
it back and forth,
Hmm.
these are things that you need to look at when your tax whoever preparing your taxes send it to you. Look for the signature. Make sure they
Yes.
signed it. You know
You
what
want to
I'm
look on the bottom of your page two of your 1040. At the bottom, it says pay preparer. They're supposed to have their name. If they're running a business, they'll have their business name. They'll have their business ID number. They'll have their their preparer tax ID number, an
saying?
address, and a phone number, and an email address. All
Gotcha.
identifying information that the IRS can see that a pay preparer prepared this tax return.
Okay.
So that's what you definitely want to look for.
Okay, what else people need to know that you ran across that they need to prepare for if they're not letting you, which they should be letting you, give you a call at your number, and that number is 773-820-9033. So what they need to really look for is anything, like I said, we already went through what's different or whatever, but I need the people
Well,
to be just staying in.
there's a couple more things that I wanted to
Okay.
talk about some new deductions that
Okay.
are
In place.
enacted in place this year. So
Mhm.
I talked about the overtime. Up to $12,500 of your overtime is tax deductible. People that are tip earners, like valet parkers,
Mhm.
waitresses, bartenders.
Uber.
Now,
Uber.
yeah, Uber, yes, they
Okay.
they do get tips. So those tip incomes is usually reported on the W-2 in box 7. However, um, if it's not, and you have to keep a track of your tip income, that that tip income is going to be deductible as well. So
Mm.
part of the tips this year is
Oh,
tax deductible. Another huge one that I saw is car loan interest. How many people is paying for a car right now? A lot.
yeah.
Up to $10,000 of interest is now tax deductible. I think that's huge.
Wow.
I think
Wow.
that's huge, because just with sitting down with my clients when I just do their personal financial reviews,
Hmm.
because like I said, I do taxes and financial services. I'm seeing a lot of people paying a boatload of money for cars.
Yeah.
And the
Yeah.
majority of that car payment is interest, especially in the first couple years.
Mm.
Because
Yeah.
mostly all of your car payment in the first couple of years is going towards
Interest.
interest. Yeah.
Yeah.
So,
Yeah.
that's huge. Being able to deduct up to $10,000 of car loan interest this year,
Wow.
it can help out tremendously. It can
And
help
you
out
can't get too much
tremendously.
credit because I mean you get too much credit to
No, I'm not giving him no credit like that because
I'm
there's
just
look. Let me tell you something. I am all for the people. I work for the people. I don't work for the
yeah.
other people. I work for my clients. I work for my clients. So I'm
Okay, wait.
always seeing what's the best outcome for them.
Okay, Laquita said only if the car is a 2025 though. Is that true?
I would have to look that up to verify that, but I don't believe so. I don't believe
Okay.
so, but don't quote me on that. That's something
Okay.
that I could answer a little bit later.
Okay. Gotcha. Gotcha. Gotcha.
Yeah.
Okay. Continue. I mean, anything else?
Uh-huh. And then lastly, there is an enhanced deduction for seniors. So if you were born January 2nd, 1960, before January 2nd, 1961, there's an additional $6,000 deduction for seniors.
Mm,
So I think
mm.
that's good for seniors. Yeah.
If they working,
Um,
yeah,
Working
because,
or not only working, because lots of seniors are taking pensions
okay.
and they're drawn from their 401ks and things like that. So if they have adjustable taxable income, they get to reduce it by an additional $6,000.
Gotcha, gotcha.
Mm-hmm.
I got a question. Because I told someone I was doing a show like this, preparing taxes and things like that. And the question I was asked, she said, it will see what you say. Okay, she is getting Social Security right now, but like she's barely making it. You know what I'm saying? But she was
Mm-hmm.
wondering if anybody could carry her on their income, on their taxes. They helping her out and whatever, you know what I'm saying? Are they able to um I mean use them as like,
A dependent.
yeah, dependent.
So if someone is providing more than half of her expenses for her to live, then
Mhm.
yes, she is their dependent. Otherwise,
Okay.
no.
Okay. Do we got to be in the same household?
It depends on the relationship it is to her. So
Okay.
parents don't necessarily need to live in your household, but if it's not one of her children
Hmm.
claiming her as a dependent, then she would have to reside in the household with them for the full year, and they would have to provide more than 50% of her living expenses for her to be deemed a dependent for them.
Gotcha. Gotcha. If anybody got any questions, just leave them in the comment and I will relay it to Rolanda if you got any questions about this year's tax season. Trying to figure out anything else. I think that was the main thing because a lot of people, a lot of people that I know, I got aunties and stuff like that, that they are getting like Social Security, whatever,
Mhm.
and it's they making it, but it's kind of hard for them, to make it because a lot of things is going on now. You know what I'm
Oh
saying?
yeah, a lot of things. Cost of living inflation is crazy high.
Right.
So
So it was more is they and I know not saying it wasn't one of my auntie, but like I said that's been going around because a lot of people that I talk to now are older people. You know what I'm saying? They're trying
mhm.
to figure out how to get some more income. Not saying get over, but get more income in or whatever. You know what I'm saying? To where the tax season come because some people don't have W-2s like where they get the Social Security, whatever, or do they?
Mhm.
I don't know.
It depends. Everybody's individual circumstances are unique. So just give them my number and we can have a discussion and we can see, what their specifics are, and then we can
Okay,
advise them from there.
gotcha, gotcha.
Yeah, and that's another thing. Everybody's circumstances are different. So you can't make a lot of blanket statements sometimes when it comes to taxes.
Yeah,
Because just because you guys made it could be two individuals making the same amount of money on a W-2, but you could be single, this one person could be married, this person can have no kids, this person can have three children, and they're going
mm,
to have two different refund amounts or tax
gotcha.
bills. So it just depends.
So how does the and like I said, these questions, I mean, I may know, but I'm just doing for people. Just how does the head of the household work? Because I know a lot of people. I'm claiming head of the household. I'm claiming head of the household. You know what I'm saying? We go back and forth with that. So how does that work?
Head of household means that you are an unmarried individual you have provided the sole person that have provided the expenses to run this household. So that
Gotcha.
means you're paying the rent, you're paying the light bill, you're paying the vast majority of all of the bills.
Okay.
And you have a qualifying person who resides in the household with you, whether that person is your own biological child, a stepchild, um, a niece, a nephew,
Mm,
a parent.
gotcha.
If the person does not have a relationship to you like that, they would have to reside with you in the household for the full 12 months.
Gotcha. So if you stay with, if you like, for instance, if someone to stay with me, but not, they can't claim head household, but they paying rent like in the basement or whatever. They can't claim head of household. How would they file?
Well, if they're living in the basement and they're in separate quarters with you, that
Okay.
basement quarters would be their household, but they would still have to have a dependent. And well, not I'm sorry, not a dependent, a person that qualifies them for head of household. So it has to be two people in the house, basically.
Okay. Gotcha. Okay.
And that person, if it's gonna be a dependent, then they need to have provided more than half of their living expenses. But
Okay.
if it's just a qualifying person, they just need to reside in the house for them for more than half the year if it's a parent, a child that is their own niece, nephew. If
Hmm.
it's not any of those relations, that person would have to reside for them for the full 12 months.
Gotcha. And last, what I have is let's say you got a kid that was in high school or whatever. Now they out of high school and then going to college. How should they file?
Yeah. So still, that child is your dependent because you're providing more than half of their living expenses. Although
Okay.
they may have a little side job,
Hmm.
that they've worked,
Hmm.
they are still going to be able to file their own tax return because they may have had withholdings. So if
Okay.
they've had taxes withheld from either federal or state, you want to file their tax return just so they can get that money back. But in filing their tax return, they're not going to be claiming their own exemption. They're not claiming themselves. They're just claiming to get that money back that was withheld
Okay.
from their pay, but they're still going to be listed as your dependent on your tax return. But here's the key point: that person that prepares a tax return for the child have
Hmm.
to check the box that that child can be claimed as a dependent on someone else's return. If
Mm,
they don't check that box, it's going to kick it out as a dependent on the parent's return. So
gotcha.
to circumvent that, what we've adopted is that for dependents, we just do those tax returns free,
Gotcha.
just so we don't screw up parents' tax returns.
And she's not lying.
Because,
She helped us out with that one. She
yeah,
helped us with that one.
and I'm gonna tell you, I got that from my mentor George Hill because he always said, "Hey, if you start them out young doing their taxes, when they become adults, they're gonna be your clients anyway
Yeah.
because they've been
Yeah.
coming to you anyway, and it
Right.
works."
Yeah.
You
Yeah.
know, that's a simple return. You
Yeah.
can do that one free. You can throw some free stuff in. People like free.
Yeah. Everybody can afford free.
Yeah, exactly. Who don't like free?
Right. Johnny's just joined us. She said, "Hey," and Darlene as well.
Hey
Uh,
y'all.
yeah. Johnny said, "I definitely need to sit down with Rolanda." So
Definitely give me a call, Janice. You know I got you, girl.
the number's up there on the screen, Johnny's. For more information, 773-820-9033.
And just for those who tune into this podcast or view it, after the live has gone by, what I would like to offer you all is a complimentary personal financial review. That's typically $350, seriously.
Mhm.
But I'm telling you, with these times that we are in right now, we all got to normalize talking about money. We got to stop walking around here suffering in silence with our money
Mm.
because a lot of us are doing that. I sit down with people every day, and sometimes I feel like a a counselor, because people are drowning in debt. People
Mm.
are drowning because they trying to, as the old people used to say, live like the Joneses
Yeah.
or whatever. We have to stop doing that. We have to stop killing ourselves. So, what I want to offer people is just free financial education. Now, what you do with it after I give it, it's up to you. But in a personal financial review, we look at all of your finances, which is your income, whether it's W-2, 1099,
Hmm.
business. We look at all your monthly expenses. We look at your retirement accounts. We look at all of your investment accounts, whether it's CDs, mutual funds, insurance, cash value insurances. We talk to you about when do you want to retire. Sometimes retirement isn't an age. Most of the time, retirement is a dollar amount. That's what it is. It's a dollar amount. It's not necessarily an age, because if it was an age, we wouldn't have Walmart greeters.
Right.
They not
Right.
at home
Yeah.
because
Yeah.
sitting down talking about, oh, I'm bored. Let me
Yeah.
go get me a new job. No, they ran out of money.
Mm.
Let's let's normalize talking about money in the right, healthy way. So let's have a personal financial review. Look at all of that. I and be truthful.
Yeah.
Please be truthful, because I'm gonna give you recommendations based off the information that you give me.
Hmm.
And so I'm going to give you financial recommendations. I'm going to help you tax plan for the new year. And so you can be whole. So
Yeah.
you can stop worrying and having sleepless nights. Because a lot of people, the number one cause of divorce is money.
Yeah. Definitely.
The number one cause of people not being able to sleep at night and having anxiety is because they worried about money and bills.
Stressing money.
Stressing, money and bills. People are sick, heart attack, strokes. They
Hmm.
laying in the hospital talking about, I got to get back to work so I don't lose my house,
Yeah.
so I don't lose my car, when they should be worrying about their health.
Yeah.
Health
Yeah.
and wealth goes hand in hand. So we got to do better, and we got to open up and talk about it.
And definitely, and that's why I wanted you to come on here because, like I said, I mean, um, I know you're gonna keep it real, and I know you personally, so I'm not gonna have anybody on here that I don't trust. You know what I'm saying? When it
I
comes out to this
appreciate
or
that. I
whatever.
appreciate that.
And and like I said, definitely people need to get in contact with Lana because she's a real good person and she's gonna tell you the real deal what's going on out here. And that's why I wanted to bring on here. Because like I said, everything changes every year with when it comes down to taxes
It
and things like
does.
that. And she's giving you a heads up to what to look for. And maybe, and this is why I wanted to ask you, if they don't call you to do the taxes, what should they be asking their the person who preparing their taxes to make sure they're getting out of.
It's not about what they should be asking them. It's what they should be asking the client. You are going to a professional for their professional expertise.
Okay.
So, as long as you're being open and honest about what you have, they're supposed to be asking all the questions, not you. And
Mm,
if they're not having that rapport with you, I call them data entry people. They're
okay.
dips. They're just entering data,
Yeah.
and they're not tax professionals. They're
Yeah.
just entering data into software and spitting out numbers. They're
And
supposed to be asking all of the questions. And when they're not asking you any questions,
mhm.
that's kind of a bad
And see,
situation.
and see
Because
that's
I'm gonna tell you,
yeah.
because as with a new client, they're just gonna give you what they have, and you're supposed to ask some questions based off what they've given you. And
Yeah.
when you're having that rapport with your clients, then that may spark some questions that you may have at that point. But
Mhm.
right off the bat, I mean, I guess the question would be, do you sign your tax returns? Do you have a P10 number with the IRS?
Yeah.
You can have those
But who
questions for the
yeah.
person,
Most
you
people don't
know.
ask that. Yeah,
Yeah,
but I
most
mean,
people don't
yeah.
ask that, but you could. You definitely
Yeah.
can ask that.
Gotcha. Because hold on, let me see. Okay. Sante said, do she do taxes and financial planning for people in other states outside of Illinois? Yes.
Absolutely. I do state tax returns for individuals in all 50 states and U.S. territories.
And she's good. Like I said, I've been going for like this is my third year, ain't it? My
Hmm.
third year? I think my third year,
Yes.
whatever. Yeah, I mean,
Hmm.
and like you said, I mean, because I know you're gonna do it in my best interest because you know me or whatever, and I want that feel that I feel comfortable of then somebody that I know do my taxes, as opposed to going to not to knock it instead of going to Walmart and let somebody from there just like you said, just typing in some stuff or whatever, you know what I'm saying?
Yeah.
No eye contact or nothing really, just
Right. Because I'm
typing
gonna tell you those type of, not knocking those people because I don't know how they operate.
there.
But for the most part, their focus is volume. How many can we get complete in this time frame?
Hmm.
And most of those people are data entry people. They aren't skilled tax professionals.
Hmm.
They're not going through a complete tax interview, going line by line on a 1040 form, asking you every single question that's there.
Right,
So
right. And like I said, I mean, and that's the pour you want to get for me. That's the pour I want to have when I'm dealing with my taxes because you want to make sure the person is doing in your best interest, opposed to just typing in things.
And you know
Because
what? I'll give you another question that they can ask. How did I get this refund? Or why do I owe this amount? If they can't go line by line and explain to you why your refund is this amount or why your tax bill is this amount, they don't know what they're doing. Period.
that, that's one of the questions you should ask instead of just taking it like, man, how
And
old is
right,
just
right.
be
Yeah.
complaining. It's just start complaining. But you to how okay because this most people want to well most people ask it because once you file the taxes everybody want to call when I'm getting it when I'm getting it when I'm getting it so people want to know how long is it what's the process how long it takes
Okay.
now yeah you know what I'm saying so the
Good
turnaround
question. Good
yeah
question. Typically, it's 21 days, within 21 days. Years ago, we used to get a refund cycle chart. They still do have refund cycle charts, but they just don't post them anymore.
mhm,
But typically, within 21 days, you're done from the date that your tax professional submits it to the IRS and the IRS accepts the return.
mhm,
Then you start counting 21 days from that date. um, Typically is before. And
mhm.
the 21-day window is given that there's no additional review that they want to perform
Okay.
on this tax return. Now, there may be some instances where they need to review a return for some deduction that's on there, but typically within 21 days. Two things I do want to mention about the refund
Mhm,
issuing. What you want to also make sure is that you're keeping your address updated with the IRS, because if your address does not match, your tax return is going to be flagged for identity protection
mm.
verification, and that's going to take an additional 9 weeks for them to
Wow.
process. And I'm gonna tell you, they
Wait, say
have
that
been
again.
take
Say it
keep
again.
your address updated with the IRS, because if your address change from last year to this year and your preparer is not checking the box that your address change, that's why it's key to have that ID.me account with the IRS and you
Mm,
go in there and update your address.
I got
Because if
that.
those addresses aren't updated, they're going to flag that return as identity theft.
Hmm.
And now you're going to have to verify your identity. And
Wow.
that's going to take 9 weeks.
And then you'll be calling Rolando or anybody like, when what happened?
Right. And it's going to be like, you got to let that 9 weeks tick. And I'm telling you, that's going to be 9 weeks after the 21 days, because you're typically not going to get the letter in the mail until after the 21-day
Hmm.
mark has passed. And then it's going to generate that letter that's going to get mailed to you to say,
Yeah.
hey, we need you to verify your identity.
And like you said, I think if they got if they got that, what you call it,
The ID.me account.
yeah, if you don't have that, you need to get that because that makes things work a little bit faster instead of
Yes.
sending a letter, then send it to them and things like that.
Yeah.
You wanna get that stuff loaded up, get your account for that.
Yes.
You know what I'm
And
saying? We'll definitely
so
do that.
for our clients, we're requiring them to give us access to their ID.me account. And the reason why is that we are going to be listed as authorized tax information. Well, they give us tax information authorization to their ID.me accounts. So if
Mm,
I need to pull a transcript for a client, I can pull a transcript. If there's some letters that's going to go out from the IRS verifying that their ID, I can look it up online before they even get it in the mail. So
mhm.
it keeps me in the loop faster to know, oh, this is going to happen. Let me start working on this now before the client gets the letter in the mail.
Gotcha,
And
gotcha.
so it helps us to be proactive with our clients. So that's something that's required of all our clients this year.
She said, Johnny said, I need the loophole the rich people be using. She need the loophole for the
Call,
rich people be
call
using.
me. Call me. Everything is loopholes. Everything
Yeah,
is tax codes. And yeah, just like 401k, everybody walking around thinking that's a retirement plan when it's an IRS tax code.
yeah, because if you try to take that sucker out, they're gonna tax it.
Yes.
So,
Yeah.
but it was
But
you
that's a
said
whole nother podcast.
right. The two because you said you had two things. So it was maybe did we throw you off a little bit? It was something else you wanted to because
Let's see.
you talked about the before we start you talked about the address. Make sure your address is up to date. It was something else before I told you to say it again.
Let's see. I'm trying to see. Oh, the other thing, because I we talked about the 21-day processing time. The
Mm,
other thing, if you have earned income credit, child tax credit, um, American oh God, American Opportunity Credit, which is a credit for college students. Their parents get to write off a portion of their tuition, books, and fees. If you have those deductions on your tax return, I mean, those credits on your tax return, due to the PATH law that was enacted when Obama was the president, so that was protecting Americans against tax hikes. When that law was enacted, it has the IRS do additional processing on those type of returns. So those type of returns cannot be those refunds for those returns cannot be released until after February 15th.
gotcha.
So anybody that has those credits, they're never getting a refund before February 15th. So do not call your tax professional hounding them about your refund. If
Mm,
it's not after February 15th, it cannot legally be dispersed yet because
mm,
they're making sure no fraudulent things are happening with those credits. You aren't a victim of identity theft because identity theft is a real thing. It's
gotcha.
it's a real big bad thing now. So
What I mean, I know what is the best time to file? Early or later?
it just depends. I'm advising people if y'all could get y'all taxes done this week
Mhm.
before January 31st, do it. Because I promise you, I really believe the government is going to shut down again. And if the
Wow.
government shuts down again, we don't know what that's going to look like. We don't know if they're going to partially keep the IRS going, operating. They're already still behind from COVID. I
Mm,
have some clients that are still waiting on 2020 amended tax returns.
wow.
It's 2026.
Wow.
When COVID was here, the mailroom got shut down for months. Lots of documents got lost.
Mm,
People have gotten laid off, quit, passed away because of COVID-19.
yeah.
We've had a lot of things happening. When Trump got in office his second time, a lot of people quit, got fired, early retirement.
Hmm.
Same thing when the government was shut down in November. A lot of government officials and employees quit, furloughed, got laid off, retired early. So it's so many things have affected, our IRS processing. I say the earlier the better. Don't wait to the last minute.
Mm.
Do not. The earlier is always the better.
And I didn't even think
Now,
about that. Yeah, I didn't even think about that. I mean, if the government shut down and you file your taxes later, you gonna be probably don't get it.
way in the back of the line.
Yeah,
So we
and
don't know what that could look like. We
yeah.
just really don't know what that could look like. So,
So take a note of that. When you get if you got your W-2, don't say, I'm gonna wait, I'm gonna wait. You better get that done. You better get it done
yeah, I
ASAP.
say the earlier the better. The
Yeah.
earlier the better.
Okay, Johnny said, "Dang, I always wait," but no, you want to, and that's why because I know a lot of people try to hold back or whatever. Because some people mind thinking like, well, if I hold back, they ain't gonna look into my stuff because everybody else be filing at the same time. They thinking they ain't got time to look at their stuff. They think they know the government more than the government know them. You know
No.
what I'm saying?
Yeah.
So,
And I mean, and let me be honest with you. They may not have time to look at your stuff with a fine tooth comb, but guess what? They got 3 years to look at your stuff.
mm, mm,
Well, they got longer than that. You got 3 years to try to recoup a refund if something, happens different with your taxes. But they can go back as far as they want to look at
yeah,
a tax return and audit it.
wow,
So you may have gotten through the cracks and got that refund or got that little bitty tax bill right
mm,
now, but they can go back as far as they want to and
yeah,
audit a tax return. So that don't mean you done got over on them. That just means it got postponed for a little while.
right,
That's
right,
it.
right.
That's it.
So, I mean, having tell you definitely want to get in contact with Rolanda to have a look at your tax information, or whatever. She she do a good job. I mean, like I said, it's not like I'm not. I haven't. Like I said, this is my third year, or whatever. And if she wasn't doing a good job, I wouldn't have her on the show. You know what I'm saying? So you definitely want to get in contact with Rolanda to look, and she'll definitely help you out whatever's going on with the taxes and things like that. Um, so we got from now because today is the day you can file up until April
15.
15th.
But
15th.
if you are a business and you have a business that's a multi-member LLC or a S or a C corporation, those taxes are due March 15th.
Got that?
Every year, corporations, multi-member LLCs, tax returns are due March 15th, not April 15th. And
Okay.
there are monthly penalties for each member or shareholder that do not file a timely return.
Wow. Wow. Let me see. Okay. Shante said, I always waited because I don't be in a rush to pay as I very seldom get a refund, always end up owing something. That's what she said. You need to call Rolanda so
Well,
she can help you out.
I would say, Shantae, make sure that you're filing timely though. Because you don't want to get hit with a failure to file penalty or a failure to pay penalty. So make sure that you are filing by April 15th and make sure you're paying the bill before or by April 15th because
Got
there's two different penalties that you can be hit with because you're not doing things on time.
Deputy Shante, you definitely need to get Rolanda a call. Laquita said, I remember I used to love income tax time. Man, not no more.
Call me, Laquita. There could be some things that are being missed. You just never know. You just never know.
The Kanye wait. Okay. This they started to come in now. They started to come in.
And look, and if you're not gonna file the actual tax return, make sure you're filing at least an extension. The
Hmm.
extension has to be filed no later than April 15th. Don't call April 16th talking about can I file an extension because it does not exist because the
Huh.
deadline is already passed. You have to file before or on April 15th.
Okay.
And so that gives you an automatic extension of 6 months. And here's another misconception. People think that because they're not filing by April 15th that they have to file an extension. If you are a person that anticipates a refund, you have 3 years to file that tax return. No extension needed.
Mm,
So,
gotcha. You got one person. My cousin Corey said they got me for 500 one year because they said that they didn't get enough out of my check during a year. I was making a ton of overtime, so he was doing a lot of overtime.
okay. That could be true. That could be definitely true. Yeah.
But
So
you said this year is different though, right?
this year they're allowing up to $12,500 of overtime deduction.
So you
So
probably you
you
probably
just
gonna get that much.
you gotta dig in the crates and look at those check stubs. Go online. Everything is usually available online from your employers, and you're gonna have to add up those overtime hours and wages and deduct it from there.
Okay, yeah. Jenny said I got to find all the deduction I can. Terry, I don't get $1 million back because if I had $1 million back, boy,
Look, let me tell you, you can't get $1 million if you ain't made no money.
right.
So hey, and that's the one thing, people want all this money and they ain't made none. You done made $12,000 and you want 20,000. How? That don't make
Yeah,
sense.
and I think because I know we're about to get up out of here, but I definitely, if possible, I want to do this again before the whole tax thing is over with. Because if people got questions who haven't filed or who haven't even seen this, I want to bring you back on when you're not busy because I know it's about to get real hectic.
There's no such thing as when I'm not busy. I am busy all year round.
Gotcha.
Taxes is I call taxes waves. This
Mm,
first wave is what taxpayers call tax season. After April, I'm doing audits. After audit season, I'm meeting with business clients, restructuring their businesses.
mm.
After I'm meeting with them, I'm meeting with individuals that want a tax plan. So I'm always busy.
Okay.
I'm always busy and I'm always open. So,
Well, I mean, whenever you feel, because I definitely want to bring you back because I think this is
well,
good information.
we'll set up a time and day and we'll definitely make it happen. Yeah.
Okay, so Johnny's got, I think he's got one more question. So how do the one who made money find the deduction?
Come see me
Check it
because
out.
taxes are an individual thing. There's no way that I can tell you right now what will work for you without me seeing your specific circumstances.
Yeah, and like you said earlier, everybody's situation is different. You know what I'm saying? Just
Hmm.
because y'all may make the same amount, it may
Hmm.
still something may still be different. You know.
Yes, because you could be a homeowner, somebody could be a renter. You can have children, somebody could not have children.
Mm,
You could be married, somebody can be unmarried. Just because you guys made the same amount of money does not mean you're going to have the same refund or tax bill,
yeah.
because taxes is a multi functional moving parts, and everybody parts are different and they move differently.
Okay. Johnny said she'll give you a call this week. So mine's is set up already. I already got my day set up. So I'm getting all my information together right now as we speak it. You know what I'm saying? So Corey said, I appreciate all the information you may hear from me. So you got some people gonna
Okay,
call you.
Corey.
Yeah.
Don't be getting out here talking about you gonna call or don't call.
That's my cousin. I'm gonna make sure if he ain't calling you, I'm gonna follow up on you, Corey.
But let
Definitely give
me
her a
tell you
call. She's
all,
good.
I love, absolutely love what I do. I really truly do. I really do. So call me.
Got it. All right, no, no problem, Johnny. You know, I'm gonna try to bring. We're gonna try to bring the news. You know, what I'm saying around this time every year we do tax season. It's tax season time, so we want to get the information out there. Like I said, once we came on, a lot of things changes every year. So just get y'all the information that y'all need or whatever. So anything else you want to leave them before we get up out here? Anything else?
Um, I just want to tell you guys to just, tax plan, be very open and honest with whoever you do go with. Ask any questions that may come to your mind. Um, and feel comfortable with whoever is doing your taxes. Don't be afraid. Don't feel like you have to be loyal to someone because you've been going to them for a certain amount of years. Your loyalty lies within you.
Hmm.
You're supposed to be loyal to yourself first,
Yeah.
not to any person or any person's business. So if you're somewhere and you feel like you're not getting what you need, go look elsewhere. Even if it's me, I just had a client to call me, and I've been doing their taxes for years, and they said they wanted to try somebody else. I said, great, good luck with that. And I do mean that.
Mm.
But I know I've been doing every possible thing on their tax return. So I just pray that whoever they go to continue to do the same thing for them and don't fudge up stuff. Because let me tell you, you go somewhere and get fudged up, don't come back to me because I don't want no parts of that because I run a legitimate business and I continue to want to be that legitimate business, and I will be. I will not let anybody take me down. Not for no goofy stuff.
Right, right, exactly. And I'm not going to even lie. I was guilty to a fault of that because I was like being loyal, being loyal because it is nothing wrong with that. But I
It's not,
knew,
but you got to be loyal to you.
yeah, exactly when it come down to this. So once I reached out to you, I like how to do it. Let me go ahead and start working with her. And then because she had my information, I don't have to constantly give information to a lot of other people that I'm
Hmm.
steady switching up on people. You know what I'm saying?
Yeah.
I ain't got my well, she got my information, but I ain't got to go now give my driver's license, social security number to somebody else or to somebody
Hmm.
else. You know what I'm saying?
Yeah.
If you got somebody that's doing your taxes, try to not be
Be
loyal, but be, you know, I mean, I got a pull with her now, you know, with Rolanda now, you know what I'm saying? So I know, okay, she will look out for me, you know, to make sure everything is like it's supposed to be, you know what I'm saying?
yeah.
So um
Yeah,
give
just
her
have that rapport with that person. I'm glad you said that. You have to have a rapport with the person that's doing your taxes. You
mhm,
know, there's lots of good people out here that's doing taxes. And I love them because they're my colleagues.
mhm,
There's enough business to go around for all of us. We don't have to be crab in the buckets. I
right.
love meeting new tax professionals. I'm even in a Facebook group with Illinois tax preparers, and I love the community that we have.
Mm,
And we give each other advice. We bounce ideas
mhm,
within each other, and it's a great group to be a part of. And I'm never knocking anybody's ways of doing things. However, I don't like when people are trying to inflate numbers just to
mm,
make them seem like they're a god when it
yeah.
comes to doing taxes, and then you leave your clients holding a bag later, and then they're going to somebody else to clean up your mess when you
And if
knew you wasn't supposed to do that.
right, exactly.
You know, don't
Yeah,
do that. Don't do that to people.
yeah. And also, I mean, like I said, to get her numbers up there again, once again, is 773 820 Give her a call and she's gonna look out for you and get see how much, you know, how much because I don't know what the charge because everybody charges is different too. So everybody don't get the same thing neither. So you want
Yeah.
to expand on that before we get out of here?
Yeah, I could do that. Fees are according to the complexity of the return because everybody's return is different. I Some forms, is simple. Some are a little bit more complex. So, I can say that the typical Illinois return runs about $400.
Gotcha.
and
Gotcha.
and the markets are different too, different states. Like we are actually preparing returns in about 16 states right now. We
Hmm.
have clients in about 16 states that we service right now. So
Wow. Wow.
yeah, yeah. So
Okay.
markets
Okay.
are different.
She said type it. Oh wait, Johnny's. What you want to type it in the chat? Also, what you want the phone number or what you need before we get up out of here? We're still on for like one more minute until we figure out what you're talking about. Yeah, like I said, I mean, like I said, we're probably hopefully we could come back sometime in like beginning
Late
of March.
February,
Yeah, late February, early March. You know
March.
what I'm saying?
Okay, that sounds good. That sounds good.
So I mean, people and if who haven't people who haven't done a taxi yet. I mean, whatever. Oh, the number. Oh, everybody wants the number, so we'll put it in the chat.
Okay. And just know too that most of my clients I do deal with virtually. So you don't necessarily have to come to the Chicago Hyde Park location to do a personal face to face appointment. I do offer that service simply because I have clients that have been coming to me since 2002. And when I moved to Florida, they were scared that I wasn't gonna come back, and they're like, "Oh, you're gonna leave us and never come back?" And I'm like,
Right.
"No, I love what I do. I love y'all. I'm gonna come back." So, I do still see clients in office here in Chicago, but a lot of my clients, I want to say about 80% of my clients, I do deal with virtually. But some people do like the brick and mortar. I have clients that I see in Tampa, Florida, face to face, but a lot of my Tampa clients I don't even see. We work
Wow.
virtually. I have a client portal where my clients just upload their documents to a secure client portal, and
Hmm.
I get a notification in real time that you have uploaded. And I'm just not a one pony show, a one man band anymore. I have six tax professionals that work alongside of me, and they are very skilled and knowledgeable.
So she's not getting bombarded with a whole bunch of stuff. So she's not. So don't think
I'm
that she
not
won't get
working
to your stuff.
alone, right?
Right.
I'm not working alone. There's always going to be a co-advisor assigned to your file as well as me, so you'll have 2 points of contact.
Gotcha. So I just put the number in the chat. So everybody get that information and give her a call. Definitely give her a call to set up your appointments and things like that. So once again, Rolando, I appreciate you coming on here this tax season. We'll be back again the end of February, beginning of March. We just figure it out. Then we post it up there.
Okay, sounds good. And said, thank you so much for always, extending the invitation to come on and set it up production. I really appreciate you.
You know I got you though, Rolanda. Y'all take it easy. And like I said, we'll be back again middle of, well, not middle, end of February, beginning of March. We'll figure it out though.
Yeah, we'll work it out.
Until then, talk to you later.
All right.